Awesome. So this is the live training for mainly for the Delorean indicator. We also go over the IM harmonic scanner. If you have any questions, we also go any usability issues with TradingView. And then we can hit up any ninja questions you want, price action, price point, support and resistance questions that you have, but we mostly hit the Delorean. Does anybody here have any pointed questions that they wanted to ask before I get into a generalized overview of the Delorean strategy?
I have a question. Do you follow like Patrick Kinney, like his Delorean?
I'm sorry, I don't know. Is Patrick in the Ninjas?
He's in the IM Academy, and he teaches the.
Patrick is the creator of Delorean.
Yeah, he's the creator of the stuff.
Okay.
Yeah.
No. Did he do the 5-day boot camp?
Yeah.
Yes.
Mm-hmm.
Yes.
Okay, so I went through his boot camp. I actually didn't know he created that. That's really interesting.
Yeah.
No, I have not been. No, I don't follow him. I did do his boot camp, and he explained it really well. I know in his boot camp they were like, he made the strategy for it, the Delorean strategy, which probably is a very good strategy, but I wasn't hugely interested in adding anything on. So I just kind of took from that and just kind of started putting the Delorean with other indicators that I was already using and got a pretty good strategy going.
What's your success rate using the Delorean?
Okay, so it's not just the Delorean. So I put the Delorean with a couple other indicators. The other day I won. So my schedule is a little sketchy right now because I'm a general contractor, so I'm not able to sit in front of my computer for like the last 5 weeks like I like to, right? I've been on a job. So when I've sat down, let's see, last night I entered 2 trades and won both trades. The other day I sat down, made 7 trades and won 5. And I can't remember much beyond that. I think I'm sitting at about 70%. I win most trades I get into. I'm not always in a trade for a long time, but it's not very often that I get in a trade and it goes the other direction. And,
okay.
And that's mostly because of the Delorean. Now it may reverse on me, but usually I can break even at least. It's not very often that I lose a trade seriously anymore. So it's pretty effective, pretty good.
I have a question.
Sure.
Do you use the Ninjacator and the DeLorean together?
I do.
Okay.
I do. And guys, and I'm happy to go over my exact strategy with you today if you would like to do that. So I use the Delorean mostly. I use the Ninja Matrix. I do use the Ninjacator. The Bollinger Bands are another huge one for me. And I use the harmonic scanners.
Sounds good.
So yeah, so I gotta get those, 5 different strategies, all pretty much saying the same thing to me before I'm gonna make a move. I had a question from somebody in the group yesterday who's gonna watch the recording, and he was using the harmonic scanner in the IM Academy and missing trades off of the harmonic scanner. Is anybody else having that problem? Okay, no big deal. Does anybody else here use the harmonic scanner?
Yeah.
I haven't used it lately, but I have to.
You haven't used it lately, okay. So I was missing trades off the harmonic scanner as well, because it seemed like I would take a trade on the harmonic scanner and then it would just, the D would just keep moving and I would miss the trade and it would hit my stop loss. It was very frustrating. I actually quit using the scanner for a while. But when I got involved with the Delorean, that changed for me, and I'm happy to show you guys how that kind of correlates there, if you'd like to. Okay,
Yes,
any other
please.
questions?
No, I just have one more quick question. All right, you
Sure.
said you used 6 indicators, and that was the
Five.
DeLorean
5 or 6.
5. Okay, the DeLorean, Ninja Matrix, Ninjacator, harmonic scanner,
Mhm.
and what was the last one? Bollinger balls.
Okay, Bollinger Bands. Okay, so let me show you. Let me just share my screen. Let me show you these indicators that I use real quick. Okay. So I'm going to say I have like 3 main indicators that like always stay on my screen, and then I probably have like 5 indicators that I kind of bounce back and forth just to kind of see what they're saying, but I don't like. They're not like scripture to me, you know, like I trade off of them, just like hardcore. You know what I mean?
Yeah.
Let me just show you my indicators real quick, and you guys can write these indicators down. That way, when I'm showing you this stuff, you will understand what's going on. Okay, can you see my screen?
Yes.
Okay, good. So I am a student of Brian Knight. Brian Knight has influenced me to get to know these 5 pairs. So I am paying very close attention to these 5 pairs to the point that I understand how they move. And that's the CAD Yen, the Euro Aussie, the Euro GBP, the NZD CAD, and the USD CHF. All of these right here that are in the green, these are the 5 that I'm really sticking to hardcore. If you guys want to follow what I'm following and what Brian's following, these are the 5 that he trades quite a bit. So if we look here right now, I have the Delorean indicator turned on. Okay, the Delorean is these 5 lines right here. You can see here I have the Ninja Matrix turned on. That's this guy right here. Ooh, look at that. And then I have the Ninjacator. Yes, baby.
What numbers? Ang ngayon ako matching numbers na.
Okay. I told my son that I had a meeting and he couldn't come in here, and I think his curiosity was through the roof.
Sorry.
You're okay. Will you shut my door, please? Thank you. So down here you can see the DMI ADX key level indicator. This thing is golden. Jeff Goodwin showed this to me. This is another big time indicator that I use. The Bollinger Bands are built into the Ninjacator. The Bollinger Bands are this blue line and this orange line, and in the area in between them, of course. But that's the Bollinger Band. I use forex.com charts. Those charts don't show volume, which I think is awful. And I might end up switching to a Wanda, but as of right now, I'm not using volume to trade. This indicator right here is really easy to use. This orange line, when it gets up above, this is like the baseline, I guess. When the orange line gets up above the baseline, there's volume in the trade, and whatever line is on top, red is sell and green is buy. Whatever line is on top, that is what is in power. So you see the green line was on top, and the orange line went through this baseline. I'm sorry, I don't know what this line is called, but you can see here how the line goes straight up, and it correlates here, and the green got power. You see the red went up and the orange went back above the line, and then it was a sell market. See the red went through the line, the orange went through the line, and they went straight up, and you can see here that the sell had the power. This is a really good indicator. I know Jeff uses that quite a bit, and I'm learning it. I'm learning to trust it. Does anybody here not know how the Delorean EMAs work?
I don't know how it works. I haven't used it yet.
Okay. Okay. So let's just start from the beginning. Okay. So I'm going to turn them on here. Okay. This is the Delorean EMA. It consists of 5 lines. The yellow, the red, the light gray or light blue, the dark gray, and the dark blue. And they all, EMA means exponential moving average. And if you look at this line chart here, where the candles become a line chart, you can see it's very similar. What these lines represent are the average of previous candles. So the yellow EMA right here is the 5, the average of the last 5 candles. The red right here is the average of the last 13 candles. The blue or light gray is the average of the last 50 candles. The dark gray is the average of the last 200 candles. And the dark blue is the average of the last 800 candles. And so they all, the blue and the red, they're close together and they go together. And then these 3 here kind of stand on their own, and we'll run through these real quick. So the yellow and the red EMAs time of my entries and my exits. Okay. And here's how that works. When the yellow crosses through the red, it signals a buy. And we can zoom in over here. Well, we can just do it right here. See the yellow crosses through the red right here. And you see the market moved up. Again, the yellow crossed through the red right here, and it signaled a sell. The yellow crossed through the red here, but there was no buy there. We can go over that later. The yellow crossed through the red here, and there was a buy. This is a really good example right here. The yellow crossed through the red, it signals a buy. And then when the yellow crosses through the red, it signals a sell. Again, it crossed through, and it signals a buy. Okay. So the yellow and the red EMAs, which are the 5 and the 13 EMAs, are one signal, not the only signal, but are one signal I use to tell me when to enter and exit the trade. Does that make sense? I think that is a yes. So
Yes.
here's the deal. How do we
Yes.
know? How do we know if? Okay, so they cross. Should I always buy or should I always sell? The answer is no. The thing you have to remember about the Delorean EMAs is they want to be vertical if they're going to have power. Horizontal EMAs mean no power. Vertical EMAs mean power. So here you see the yellow and the red crossed, but the lines are very horizontal. We don't enter trades when DeLoreans are horizontal. Here, the DeLoreans cross and they're very vertical. We enter trades when the DeLorean 5 and 13 are vertical. So if you just look for examples of this, to me, this is horizontal. I probably wouldn't have entered here. Here they crossed and they went very vertical. I probably would have entered here. And a good way to gauge whether they're vertical or not is how far the lines separate. You can see that the candles are completely apart from the red 13 EMA, and they're like on the other side of the yellow 5 EMA, and that's showing power. Here you see they crossed, but the candles are very close together. Here, there's an entry, but the candles stayed muddied up here, and everything stayed horizontal. I'm never going to enter that trade. I got to wait till they cross and then go vertical and the lines separate. That is when there's power in the trade. So we're looking for the yellow and red to cross, the 5 and the 13 to cross, and then we're looking for them to go vertical. And so how do I know when to exit? As soon as they go horizontal, the trade is done. So watch this. Here's my confirmation. So I'm going in. I'll make sure that you guys can see this okay. So here the yellow and the red cross, and it's vertical. I'm in the trade. When do I leave the trade, though? Right here. As soon as they go horizontal, I'm out of the trade. Again, they go vertical. I'm in the trade. As soon as they start to go horizontal, I exit the trade. You could have entered here, probably gotten 10 pips. As soon as it goes horizontal, I'm out. Vertical, again, I probably wouldn't have gotten in here, but here it goes vertical. I'm in, I'm in, I'm in, I'm in, I'm in. As soon as it goes horizontal, I'm out. And that is how I use the 5 and the 13 to time entry and exit on the DeLorean. Are there any questions about that?
So this isn't a scalping strategy, but it has elements of that.
You can use this on any time frame, as far as I've seen. I've used this on 5 and 15, and I've used this on 1 and 4, and even the day. The principles are the same.
Got it.
It just goes much faster when you're scalping. So that's entry and exit. That's the yellow and the red. So now we move to the 50, okay? The 50 EMA is a line I use to tell me if I'm in an uptrend or a downtrend, and it's easy. If I'm above the 50 EMA, I'm in an uptrend. If I'm below the 50 EMA, I'm in a downtrend. So if I'm watching, and here's how this works. So I'm going up, I'm going up, I'm going up, and the harmonic scanner or you know, says it's about to be you know, like the C's here and the D's down here, we're looking for the downward trade, right? Or we're saying this has been an uptrend, I'm going to trade it on the downtrend. Well, it's never going to be a downtrend until it crosses the 50 EMA. And that's the signal that the trend has changed. And that's what I watch this for. So here we entered an uptrend, an uptrend, an uptrend. Here we crossed the 50 EMA, we entered a downtrend. And again, when we got back at the 50 EMA, the downtrend is over. So the 50 EMA tells me uptrends and downtrends. It's also a line that the candles check. Okay, so there's a stopping point here, and you can see that the candles love to touch this 50 EMA. They like to check it, almost like checking the trend, like trying to cross through it. The 200 and the 800 EMAs are where the market is trying to get to long term. You could look at the 200 EMA, the gray line, as a mid-term target, and the 800 as a long-term target. So here's how it works. Here's how it works. The market always wants to get back to this blue line, the 800 EMA. No matter what happens, it always wants to get back here. And that's what I watch with the DeLoreans. So the market's going up, it's going up. Once the market gets so far away from the 800 EMA, it's going to come crashing back down to the 800 or the 200, but ultimately the 800. You can see here it crashed down and stopped at the 2. It climbed again, it crashed down. It made it actually through the 8, but most times it just hits the 8 and bounces. Again, the market went up, 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 and it crashed back down to the 200. It played with the 200 here. It went way up here, and it crashed all the way down to the 8. So the deal is if I'm thinking about getting in the market right here, this is an uptrend, right? Like, okay, like you're watching the market. Okay, this is an uptrend. This is an uptrend. I feel like this is a strong uptrend, right? If we're doing trend lines, everything here tells me this is a strong uptrend, right? But I see how far I'm getting away from this 800 EMA. No way I'm taking it up. No way I'm buying right here because I'm so far away from the 800 EMA. I know that this market is about to come crashing down to the 800 EMA. And that's what we watch for with the DeLorean. If somebody says, oh, the market's going to go way up here, it's going to keep going up, it's going to keep going up. No, it's not. Because this market always crashes to the 800 EMA when it gets to, I don't know, they're all different. What is this one sitting at? 300 pips. It's 300 pips away from the 800 EMA. That's a long ways from the 800 EMA for a market. The crash is coming. The fall is coming. Does that make sense?
So to be clear, you'd be trading the retracements, right?
Yes, there's a lot of confidence in the retracements because they happen so quickly. And I'm going to show you the other side of this, okay? But trading the quick crashes to the 800 are very secure because they happen so quickly and they're so powerful. Once you lock into them, you can pretty much ride them back down. You can see how quickly the climb away is slow, the crash is high. The climb away is slow, the crash is high. I'm talking about speed now. Again, well, this climbed away pretty quickly, but again, the crash back down was fast. I shouldn't say high, I should say fast. I apologize. Again, we climb away slowly and we come back fast. That's how it works. But there's another side to this. On the 800 EMAs, we have consolidation, which EMA consolidation can look like consolidation when it's not showing consolidation on with other indicators. And what I mean is this: when all of these EMAs get bundled up together, that's consolidation with the Delorean EMAs. The Delorean has power when the lines are all spread out. When the lines all get huddled up together, nothing's going to happen. And we see here, the lines all got together and you see the market was very slow. The lines get together right here and the market slows down. When the lines, anytime the lines come together, you kind of get this slow consolidation here. But what we watch for, once the 800 has pulled in the market, it will reject the market. So we see, let's load a little bit. You see the 800 called the market back down, and then the 800 rejected it. So when all the EMAs are together, you can watch for the 800 to reject and cast the market away. I know it's a kind of a weird way to look at the market, but it works. So if there's consolidation, if all the EMAs are horizontal and together, be watching for the market to throw the candles out. Once the candles are thrown out, see how all the EMAs are together and the market threw the candles out. Once all the candles are out, watch for the 800 to call them back in. It's this constant throwing away and pulling in, throwing away and pulling in with the 800 EMA, and it's just what it does. It's just what it does, and that's how I watch the market. When I'm going through charts and I'm looking at charts, I'm looking to see how far away from the 800 EMA are we, and if we're pretty far from the 800 EMA, and the yellow and the red DeLoreans are crossing, and I'm crossing through the 50 EMA here, bam, we're headed down to the 200 or the 800 EMA most likely, and that's where I make most of my trades. Does anybody have questions? Nope, that's good. I'm hoping this is making sense to you guys. So this is my main indicator. That's how I look at charts and determine, is this a good trade to enter or is this a bad trade to enter? Now I couple that with an indicator, okay? If I say, man, is the market going back to the 800? I'm looking for the ninja down. You know, I'm also using the ninja matrix. Is the ninja matrix saying that this, you know, is it confirming, you know, that this is in fact headed down? Excuse me, I'm sorry. To the 800 EMA. There we go. So the ninja matrix here, you see it got way away. The candles, the market got way away from the 800. I got my red sell on the ninja matrix, and it went all the way down back to the 800. We got away. I got the red sell. We went all the way down, actually through the 800 on that one. We got way away from the 800. I got the sell. We went all the way back down to the 800. You see how this is happening over and over, guys. We got way up here away. We got the sell. We went all the way down to the 800. I set my stop losses on the 200 and the 800. So if I enter this trade here, it says sell. I cross the 50 EMA. I'm on a downtrend. I'm setting my take profit at the 800 or just above it, unless I think it might stop at the 200. But usually I set my profit just above the 800, and 7 times out of 10, that's what it does. Does that make sense?
Yeah, so how are you dealing with stop losses?
So stop losses are at break of structure for me personally. And if I'm at the very peak of the market, I usually set it for like 15 pips. Depending, well, unless I'm trading 4 hour, and then I might go up to 20 or 25 pips. Where's a good example? If I was, okay, here we go. Let me zoom in. Okay, let's pretend that we're here. Okay, we're gonna pretend that we can't see the rest of the market. Okay, let's say I'm looking. Sorry guys, I really want to try to zoom in on this. Okay, so I'm way far away from the 800 EMA, right? I see that we cross here. We make it through the 50 here, right? At the cross, I probably would enter this at the cross, honestly, but my stop loss is going to be set right at the top of these candles because that would break my structure. If that makes sense, I would have set my stop loss right here. If I enter the trade here, I'm setting my stop loss at the break of structure because if the market goes back up and breaks this, it's no longer a downtrend. It's back into an uptrend. Does that make sense?
Yeah, it makes more sense that I'm realizing you're on the 1 hour, so you're looking for longer moves.
I am. It's the same thing though. I mean, if we hop down here to the 5 minute and we're scalping, you know, I mean, it looks. I mean, look at this. It looks exactly the same. You know what I mean? We're way far away. Let's just do this on an upsell. I mean, on an upsell, on a buy. Sorry. We cross through here. So the 5 obviously is going to go up and down a lot more. We cross through here. I would set my stop loss here. You know, at the nearest break of structure. If I was to enter the trade here, my stop loss would be here because that would not be a buy anymore. That would be a sell. Does that make sense?
Yeah.
It would no longer be an uptrend. It would be a downtrend if it broke that structure. And that would obviously be, you know, the market's not doing what I thought it was going to do. Or maybe it is. Maybe they're just tricking me. Maybe the bankers are just pulling my strings. But for the most part, it holds pretty true. So yeah, that's the DeLoreans in a nutshell. That is my main indicator, and I add things to this. The second thing, my second most important indicator, is the DeLorean EMAs, which are built in to the Ninjacator. Obviously, this is the Ninjacator. Let's do Heikinashi here, so we can get our ninja ups and downs. Okay, so I am watching for the ninja up and down. Okay, the ninja up and downs. So the DeLorean is going to help you filter ninja up and downs, right? So look, I get a ninja down here, but I got DeLorean EMAs that are horizontal. I'm not taking that trade. I got a ninja up here, but I got DeLorean EMAs that are horizontal. I'm not taking that trade. I got a ninja down here, and the DeLoreans go vertical. Yes, now I'm taking that trade. So I'm filtering out. I'm using the DeLoreans to filter out false ninja ups and downs. The DeLoreans have to be in agreement. Here, this ninja up, and then the DeLoreans are going very vertical. I'm taking that trade. Ninja down, the DeLoreans are going very vertical. I'm taking that trade. Ninja up, the DeLoreans are going horizontally, and they're all together in this one big cluster. I'm not taking the trade. So kind of using the DeLoreans to filter out some noise. I'm going to take the DeLoreans off, and in the Ninjacator, under inputs, you can do apply Bollinger Bands. That's how I have my Bollinger Bands turned on and off. You see them disappear right there. So I'm going to leave these on. But under style, I'm going to turn off the entry up and the entry. Yeah, that was the wrong thing. We're going to turn off the ninja up and the ninja down. Here we go. Let's focus on the Bollinger Bands for just a second, okay? So this is my second most important indicator. So I use the blue Bollinger Bands in the sell market, and I use the orange Bollinger Bands in the buy market. Now watch this. This is super, super easy, guys. So here, remember I got a ninja down here, and my DeLoreans went vertical. When the candles get into the blue line on the sell, there is safety in that, okay? Look, see how the candles buried themselves in this blue line? There's safety, there's safety, there's safety. As soon as these candles exit that blue line, I exit the trade, okay? Look here, there's no, like here, there's no safety here, there's no safety here. Boom, the candles enter the orange line on a buy. I'm safe, I'm safe, I'm safe. As soon as the candles exit that orange line, I'm out of the trade. Again, just like the DeLorean EMAs, if the Bollinger Bands are horizontal, I'm not entering any trades there. You can give me ninja up and ninja down all day long. If these Bollinger Bands look like a pipe, if they look like a tube, there is no way I'm about to enter a trade. Here, let's look at this. Look here. Ninja up, but we've got horizontal Bollinger Bands. No. Ninja down, horizontal Bollinger Bands. No. Ninja down, horizontal Bollinger Bands. No. Ninja up, horizontal Bollinger Bands. No. Ninja down. Look at this Bollinger Band spike. This Bollinger Band does the exact opposite pretty much of this Bollinger Band. Look at this. Ninja down. Bam. I get this huge spike, and the candles bury themselves in the other side. Yeah, I'm taking that trade. Again, ninja up. No, this is horizontal. I'm not taking the trade. Ninja down. It's horizontal. I'm not taking the trade. Ninja up. The candles bury themselves in the Bollinger Band. I'm in the trade. As soon as they come out of the Bollinger Band, I'm out of the trade. You can see over and over what we can filter out and see. Just turn on the Bollinger Band and see, is this trade powerful? If it's in the Bollinger Band, it is powerful. Look here. If you got a ninja up right here, I know it doesn't say it, but if it did say ninja up here, you could just turn on the Bollinger Bands and see, man, this isn't in the orange Bollinger Bands. I could take the trade, but the Bollinger Bands are showing me that there's no power here. There's no volume in the market. You know what I mean? If I get a ninja up here and the candles bury themselves in the bands, that's a whole different story. You see how when there's big moves that the candles are in the Bollinger Bands? That is what I look for with the Bollinger Bands. And if you couple that with the EMAs, you start to get really solid confirmations. I know it looks like a lot, but you kind of learn to filter it out, or you can just turn them on one at a time. So I get the ninja down here, right? My EMAs go vertical, and then I turn on the Ninjacator, or I turn on my Bollinger Bands. Dang, I'm in the Bollinger Band as well. Yeah, I'm in that trade. When am I going to exit the trade? Look how it ended at the 800 EMA. Look at that. Look at this. This trade was good, and it came out at the 800 EMA, right? This trade was good. It came out at the 800 EMA. You can't make this stuff up, guys. Look here. This is a ninja down, and these candles are moving. No way I'm getting in this trade because these candles could be stopping at the 800 EMA. You know what I mean? Does this make sense, guys? We got a ninja down. We're in the Bollinger Bands. We stopped at the 800 EMA. Look how it stopped exactly on the 800 EMA. You set your stop loss just right above that 800 EMA. It's no problem. Does this make sense?
Yep.
I didn't need to do that. Good. Yeah. So those are my main indicators. None of these indicators are wrong though, guys. Yeah, Bollinger Bands, the awesome oscillator is fine. The Dawn chain channels is good. I use that. The RSI is good. The SARs is fine. TSI is fine. All of these are fine. You just got to find what speaks to you. But I just use those to kind of help me interpret the Delorean and the Bollinger Bands. This one right here. This is the one I was showing y'all earlier. This is a really powerful indicator as well. Look, if you were to use this indicator with these, look, the Delorean go vertical. I'm not going to enter this trade, but I'm just showing you. Or let's go back one. I'm far away from the 800. The DeLorean's crossed. Okay, the DeLorean's crossed. What does the Bollinger Bands look like? Yeah, I buried in the Bollinger Bands. I got a DeLorean down, right? And then I come down here to this indicator. The red is above the 40. This line is, the number on this line is 40. The orange is above the 40 and going straight up. And you see the probability of the DeLorean system being right all the time is not high. The likelihood of the indicator being right all the time is not high. The likelihood of the Bollinger Bands being right all the time are not high. But if we start stacking probabilities on top of each other, we start really getting solid trades. I'm pretty confident in trades when I enter trades. I'm losing less and less. This is a pretty good system for me. Awesome. Okay. So, are there any questions about anything I've gone over here?
Yeah. So that DMI, are there certain advantages to that you wouldn't get with the AO MACD or the multi-time frame stochastic?
I'm sorry, I don't know. I'm not familiar with either of those other indicators. That would be a good question for Jeff. I know Jeff is really good and he uses those quite a bit. I never got in.
The reason I ask is because I'm also a student of Brian Knight and he uses those often, and I really like the banker's model, but my entries have always been clumsy. So I think, you know, I'm interested in seeing this would help.
The DeLorean's cleaned up my entries a lot. In fact, it's what I learned to use for my entries. Jeff Goodwin introduced this to me, and it is what I use for entries now. They have to cross for me to enter, and you know, a really let's say if I'm trading on the 1 hour time frame here. If I'm trading on the 1 hour time frame right here, if I was watching for these to cross, I would back up to the 30-minute. And because they're going to cross on the 30-minute first, and they're going to cross on the 15 even. They're going to cross on the 15 before that. So what I do is, if I'm trading on the hour chart, which is what I usually do, I watch them cross on the 15, then I watch them cross on the 30, and then I'm really confident when they cross on the hour. You know what I mean? If I'm trading on the 15-minute chart, I'm watching the 5 minutes. Like if I see them getting close on the 15-minute chart, I'm watching the 5-minute chart. And when they commit on the 5-minute chart, shortly after they commit on the 15-minute chart, and that gives me more confidence on my entries. You also have to watch for them to bounce. If they cross right here, right above the 50 EMA, I'm not entering that trade because the likelihood of bouncing off the 50 EMA is high. So you have to watch when they cross right here, right on the 50 EMA. I know that we're through the 50 EMA at that point, and it gives me more confidence in my trade. Like when the market crossed here and was going back up, I know that this isn't an uptrend. I know it's just going up to the 50 EMA. You know what I mean? Like if I entered this trade here and I was on a downtrend and I saw the market go back up here, I wouldn't worry because I would know it was just bouncing off the 50. If I was riding it down and it started going back up, I wouldn't worry because I know it's just going up to the 50 and coming back. You use all of the lines here to kind of time your entries. You know, if the harmonic scanner or anything, if you're way up here and the harmonic scanner says there's going to be a trade, man, watch to break the 50 first before you start committing to anything. Look how many times it bounces off the 50, bounces off the 50, bounces off the 50. You see this? It has to break through the 50. Finally, here it broke through, and then it ran. So if you're missing entries, it's because you're bouncing off the 50. But if you're not watching the 50, you don't know that you're bouncing off the 50. You know what I mean? It's the first level of resistance you have to get through before you're going to get a good trade, unless you're far away from the 50 like this, and then you can just, you know, take a trade down to the 50. Does that make sense?
Yeah.
Good. So I'm going to back up to the harmonic scanner because I got asked a question about entries on the harmonic scanner early in the week. Does anybody have any questions before I back up to the harmonic scanner?
No questions.
Awesome. Okay. So I do use the harmonic scanner to shop charts. And we're just going to go with what's here. I'm not even going to try to find a good scenario. We're just going to do this. So here's the RSI. We're low, so we know we're oversold. So this is a good sign, right? We know that the market's trying to find a happy medium. So high likelihood that we're headed up. This is the 1 hour AUD JPY. Okay, so the harmonic scanner is telling me it's time to buy, right? We see we've got some upward movement here. Come on. We're still on a sell on Heikin-Ashi. You can see we're getting close to some doji candles here. But it's saying that we've got the D. It's saying to go ahead and blast off and take this trade. What I do is I come over here to the actual market, and I use the Delorean EMAs here. You see, the market went down. The EMAs went horizontal, so we're not entering the trade while they're horizontal. They have crossed here. We've got some flat bottom green candles here, which is a good sign. But I need these EMAs to go vertical, and I need to cross through the 50 before I'm going to enter this trade. And of course, you can only do that if you're watching the market and chilling out. I want to point out, guys, that the harmonic scanner is saying that you know, we need to buy, we need to go up. What is this at 82.52? Let's see what that is at 82.52. So again, this market is saying it's going to get up here. It's saying it's going to cross through the 800. The likelihood of that is really low. It can happen, and it does happen. But to me, if I'm entering this trade, I'm going to be setting my take profit more around this area here. When I enter the trade, I'm going to watch for it. I'm going to wait for it to break the 50. I'm going to watch it to stumble at the 200, and then I'm going to set my take profit down here at the 800 EMA. My stop loss is going to be at my break of structure, which I guess would be here, but the banks know that everybody's setting their stop loss here. So maybe go 5 pips or 10 pips more than that. The banks know everybody sets. What's that, 12 pips? So if I was going to set stop loss here, guys, we're going to go on down a little ways. That way the banks can break everybody down here. Everybody that's setting their stop loss at the break of structure. So this is a lot what my trade would look like, and I probably will take this trade honestly as soon as it breaks that 50. Most likely it'll bounce off that 50, come back, bust these stop losses, and then take off with the Delorean being this horizontal. There's not a whole lot there yet. This is just something to watch for. The best way, the matrix says bye. The best way to do this would just be come over here to your indicator, right click and add an alert for a ninja up. Ninja up alert, I already got it once per bar close. So, and next time I get a ninja up, it's going to tell me, it's going to text me, and I'll be able to see if it broke through that 50 EMA. So when the harmonic scanner tells you to take a trade, check your Delorean, see if they're horizontal, see if they're vertical, see if you've broken the 50 EMA. You know, see what the Bollinger Bands look like. Don't just blindly take that harmonic trade unless you just don't have a lot of time, you know. But if you have time to watch the market just a hair, you know, if you can trade from your phone just a smidge, then watch the market a little bit, use these indicators, stack these indicators, stack your probability, and make better trades. Okay. Cool. That's going to be a good trade. That's going to work. That's going to happen. That's going to be a good trade. It's going to be a good trade, actually. It's going to be 71 pips. That'll be good. That'll run out quickly, most likely. Look for that to waterfall. The waterfall is what I call it when they go, when the EMAs go vertical, because to me it looks like a waterfall, you know. So watch for this waterfall effect. I guess it would be more like a mountain in a buy market than a waterfall. Cool. You know what? Just for fun, let's run out our risk reward here. Let's see what we come up with. Let's see if we got in here. See what this trade looks like. That 3 point, that's dang near 4 to 1. It's not bad. It's not bad. The longer you wait, if you wait for it to break through the 50, you can shrink this up too, you know. If you broke through the 50, you could move this up to break a structure. That would make it 6.8 to 1. That's a good trade. Okay.
So this trade in particular looks like an ideal trade, but I was looking at NZD CAD. Last night there was a D point, and this would have worked. You could have gotten in after it passed the 50 EMA, and it would have gone down a little bit. You would have been in drawdown. Then it would have went down to the 200, but then just come all the way back up again. So in that scenario, you probably would have moved your stop to the break even, right?
So are you on the 1 hour chart?
I'm on the 15-minute.
15 minute, okay. Let's analyze and interpret here. I really want to turn this off. I'm not using it. There it is. Okay, so where was your entry at?
For you, I believe it would be the 14th at 1800-ish.
About here.
Yeah.
And this was a buy?
This was for a sell. It was a down
For a sell.
scan.
Okay. So we were going to buy it. We were going to sell this right here.
Yeah, the D point was at the top.
Okay. Okay. Yeah. That. Let's see real quick how that breaks down. With the DeLoreans. So this was a potential trade. Yeah. The DeLoreans cross. So on the 15-minute, you're kind of fighting for space. You know what I mean? So you're taking a lot less pips when you're scalping. You know, when I'm on a smaller time frame, I'll take the trade to the 50. You know what I mean? So as soon as these cross on the 15, see where they cross on the 5. So if I'm trading on the 15, I'm watching the 5. Okay. So look right here, they crossed on the 5, right? Right here, they waterfall on the 5. When they started to waterfall on the 5, I would have moved to the 15. Dang, where did it go? There it is. I would have taken the trade to the 50 if I was scalping. You consider this scalping, right?
I'd say so.
Okay, yeah. So I'm taking the trade to the 50. At the 50, I'm watching for my exit, though. I'm looking for the bounce off the 50. But look here, if you turn on the Bollinger Bands, now look, if we get in the trade up here, you see how quickly it entered that bottom Bollinger Band? We got the ninja down, we got the crossing of the DeLorean, and we entered the Bollinger Bands. Now here, when we got to the 50, we never exited the Bollinger Bands, but look down here where we exited the Bollinger Bands. So really try incorporating the Bollinger Bands to see if you need to exit or not when you're scalping. Look how every time it exits these Bollinger Bands, you get out. You know what I mean? So incorporate this into your scalping. Because you would have seen that, I mean, we would see that we could pass through the 50 here without any problems. And when it exited the Bollinger Band, we know that we're not going to make it to the 200. It's just playing with the 50.
Okay, I see. What I was
That makes
using
sense?
the multi-time frame stochastic for is basically what you're using the Bollinger Bands for.
Okay.
So you'd say for like a longer term trade, what was it? Assess on the 30-minute and trade on the hour, something like that?
For the entry, it just does it first on the smaller time frame. You know, you can see this waterfall effect quicker on a smaller time frame. You know, yeah, definitely. I guess I'm looking for confirmation on the smaller time frame, but I'm still entering on the larger time frame because that's the time frame that I'm committed to. I'm just seeing if the market is going the right direction on the other time frame. You know what I mean? But yeah, this is stacking probability. We got 1 ninja down. That's 1. We got crossing of the EMAs. 2. We got into the Bollinger Bands. 3. Did you say that this was on the harmonic scanner?
Yeah.
That's 4. Ninja Matrix wouldn't have done as much good there. Well, it still says sell, so I guess that could have been 5, but I guess I'm just saying it didn't change colors there. You know what I mean? but the Ninja Matrix was red, and I guess that would tell us that, I mean, it wasn't wrong, you know what I mean? It is confirming that we are still in the sell market. Let's throw this guy in here just for fun, because Jeff showed me this one, and I really like it, but I'm still new with it. That's not it. Gosh, I'm so new to it, I can hardly remember what it's called. I always think it's this one, and it's not. Oh my gosh, I'm not going to be able to remember what this is. The one I had up there earlier, it's the A. Gosh. I can't remember. That's horrible. Jeff is going to heckle me so bad over this. And I don't have it on any of my other charts. Oh, yeah, here it is. DMI ADX. DMI. There it is, Directional Movement Index. I can never remember that. There it is, Directional Movement Index. So what Jeff says on the Directional Movement Index is you look for the green and the red to cross. Anytime they cross, the market is changing. And then once they cross, you're looking for the orange to go through this yellow line, which we change this. The yellow line comes to you as a 60, and we change it to a 40. So when you first get it, it's higher. It's up here like this, and we turn it down to a 40. So just know that ours is a little different. But as soon as it goes through the 40, we're taking the trade. So your trade was here. So we'll look. So look, the red and the yellow, the red and the green cross, the red's on top, which means it's a sell. We went through the 40 line right here, right at the ninja down. So you see this is another to stack probability. And when you cross back through the 40, you exit the trade. So the Bollinger Bands would have gotten you out a little bit earlier. But the ADX would have gotten you out right here. So Bollinger Bands more efficient there. But the probability here is really high. This ADX would have gotten you in right here, which is exactly in line with everything else. So this is a good tool. I like this one a lot. This is the EMI ADX Q level. Yeah, so that's like what, stacking probability 6 times turns into a pretty strong trading strategy. Cool.
Yeah, man. Good to know. Thank you.
You're welcome. All right, guys. I am going to stop my screen share. Yeah. Does anybody have questions about? Go ahead.
Yes, I have a question. Do you know how to put on the trailing stop? What do you call it? Yeah, like a trailing stop loss.
You know, I trade on forex.com and I have not figured that out. I actually started looking into that this week. Maybe I can have that for next week. That's something I definitely want to know.
Yeah, I need to learn how to set up.
Are you trading with forex.com or do you use another broker?
No, I use Owanda.
Owanda. Okay,
Yeah.
I'll find it for Owanda as well. Because both of those trade directly. Are you trading directly off the TradingView platform?
Yes.
Okay, I will find that out and have that next week, Ms. Kenya. Okay.
Okay. I'm actually learning how to do both.
I use Wanda, but I don't use it on the TradingView. I have like their dedicated app. So I guess it depends if you want a market execution or if you're doing a pending order. But I've done it accidentally on a pending order, so it's right there on the menu if you download the desktop app and use that.
Okay. Okay. Good to know. I will see if there's a way. You know, I just trade right here. I just trade right here with this button, and surely there is a way to set it in here somehow, right?
Yeah.
Yeah, and I will figure it out.
Oh,
Or I
here's a
will
question,
find out that
Dalton. Do you use stop orders?
what is a stop order?
Like a limit versus a stop. A stop would be to go in the opposite direction, whereas a limit would be it would trigger a limit would trigger above where the current price is, and a stop would trigger below.
No, I don't. That's really
Because
interesting.
I know Brian uses stop orders rather than limit orders because they're a little bit safer, but for whatever reason on Awanda there doesn't seem to be the option to set a stop order if price is on the opposite side. So I think for whatever reason the US brokers might be handling orders differently.
Okay, I will look into that. I don't know anything about that. But I will find out. How long have you been trading, John?
7-8 months, something like that.
Same for me. I think it might be 6 months. I'm about the same. I got really spoiled by Forex.com, how easy their trading platform is to use, and I didn't really do a whole lot more research into it. I've been trying to get a trading strategy. I've been focusing so hard on getting a trading strategy. I haven't done a whole lot of peripherals or lingo or anything. You know what I mean? So, but I think I'm really close to getting this thing nailed down. I'm getting really close to being really dangerous with this, and it feels good, you know.
I mean, you sound like you're in better shape than I am, so I'll give you that.
You know, I hope that I am. I feel like I'm doing good till I talk to Brian Knight and Jeff, you know, and then I think, oh my God, I don't know anything. And then I win a trade, and then when I close the trade, I think, damn, like, was that skill or was that luck? You know what I mean? And I think it's skill because I use the indicators to enter the trade. You know, I have reached the point in my trading where I'm not entering a trade off of emotion ever. It's just not happening for me anymore. I'm never trading off of the feeling. I'm trading strictly off of what are my indicators telling me. So I guess that means if you win it, you knew what you were doing. You know what I mean? Hopefully, that's the thing.
Right.
So that's what I'm going with, anyways. What is your win to loss ratio right now?
Oh, it's horrible. What I had actually done was I was on demo and I had made something like, I don't know, 16% that month on demo. And I switched over to a live account and then just completely sunk into the red. And now I've been building back to my initial, principle.
So what changed?
I guess part of it was the psychology, but I think it was also just being clumsy with my entries. Like I said, because a lot of the times it seems like these moves like to start when I'm going to bed. And with bankers, you can set a pending order, but if it's not in the right place, and like you said, if it's gonna just bounce off of an EMA, then you're not gonna have a fun time.
Right.
So it's just like one thing after another after another.
I moved to the 1 hour. I started on the 15 and then I went to the 5 because I really like watching the charts. And, it's like, I watch charts like people watch sports. You know what I mean? I really enjoy just watching the chart move. But I kept missing entries to the point that I almost quit trading. And Jeff told me, he said, man, I've recently moved up because there's more stability when you move up in the time frames. So I moved up to 1 hour, 4 hour. And I pretty much hang at 1 hour now. And man, the market moves slower and the movements are more committed at the higher time frames. When the 1 hour time frame enters, the Bollinger Band, it's harder for it to pull right back out of it. You know what I mean? When it commits to making a 150 pip run to the 800, it's very hard for it to back out of that. And so there's more time to get out once you're in, and once it commits, it's pretty much committed. You know, so maybe go up just a little bit higher in your time frames, just to practice, you know, and see if you get more strength out of your trade.
Yeah, man, thanks. I think what's made me a little bit better is that I'm using these banker trades, but I'm not getting into them unless they get past my point of entry. Because a lot of the times with bankers, you either get two things. It'll just wick into the zone and then it'll take off, or it'll kind of just meander around the zone for a while and then take off. So it's safer to wait for it to go all the way up where it wants to go before you decide to get in it.
Do you have a written trading strategy?
Not really, no.
If I was you, man, I would start a written trading strategy, and you're welcome to change it. But that helped me a lot, because I was able to, when I started missing trades, I had something written that I was doing. You know, like before it was written, I was just like, maybe this will work, maybe this will work, maybe this will work. But once I had it written, I had like a 6 or 7 step, this is what I do system. And then when one of those things didn't work, I was able to look at it and say, why aren't you working? You know, and then I was able to swap that out and pull something else in, you know, and then I started being able to switch things around on this list and switch these orders. And I never came off my written strategy, which I still have now. I have all these little things all over my desk that are saying, you will do this, you won't do this. And it's all these rules for this written strategy that I have. And it takes the emotion out of it, because once you go live, it is the psychology. So it removes the psychology from it. You know, I absolutely will not enter a trade unless it has to go down my checklist of my written strategy. I also will not enter a trade unless I know where I'm coming out of the trade. So it kind of makes you have to pull back and analyze things before you jump into it. You know what I mean?
Yeah, it's funny you say that though, because with bankers, it's almost like the opposite mindset from what you're doing, where there's not really a lot to check off the list. I mean, you could be so basic that price just has to come up to the zone and you can have your pending order and it'll trigger whether you're there or not. And Brian was actually telling me for a while that I was having too much reliance on the indicators. I don't think it was so much emotion. It was just like, you know, when it comes to fine tuning the entries, I feel the need to use the indicators. But when you have a harmonic scan, the D point doesn't necessarily mean it's going to stay there. Just
right.
The stochastic doesn't necessarily mean it's going to be in your favor. So like you said, you got to stack, you know, the probability.
Right.
So I'll definitely give what
Right.
you're doing a try. And thank you for doing
Yeah.
this, because I learned something
Yeah.
new. I didn't know anything about those Bollinger Bands.
Yeah. Well, work them into your strategy and see what you get. Try to get here next week and see what you get. You know, just say, I will not enter the trade unless the EMA is crossed. Period. You know, try that for a week and see what you get. You know, see if you know you go up or down on your wins. I was missing entries, and this cleaned up my entries a lot. All right, guys. Anybody else have any questions about anything pertaining to this course? No? All right, guys. Well, very cool. I want to stop this recording.